absolutely flat as we begin opening today.
And what we're seeing are small incremental gains on the screen.
So 22 points lower on the Nifty, and the Sensex is lower by 130 points as well.
Slightly lower, 50 points, 50 points on the Nifty, that's about it. So nothing dramatic, but it's got a tinge of red since the morning. We'll end lower, and let's just sort of map the move today. So you basically had, the open, which was actually absolutely flattish.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action. In just 5 headlines, I'm Ekta Batra. Here are the top stories of the day. The market fails to hold opening gains. Nifty and the Sensex end close 0.5% lower. Financials lead the fall. Midcaps outperform. The recent run-up in stock prices has pushed the market capitalization of Indian equities to a new high, with the value of all stocks listed on the BSE crossing 291 lakh crore rupees. The Fed Reserve does a hawkish pause, holds off on what would have been its 11th consecutive interest rate hike, indicates 2 more rate hikes later this year. Fed Chair Powell says they have covered a lot of ground and the full effects of our tightening is yet to be felt. Hospital stocks perk up on a bullish commentary by JP Morgan. The brokerage firm believes that secular growth supply shortages offer promising growth prospects for the sector. Goldridge Property's gains on buying land for a luxury project in Kolkata. PNC Infra 2 gains on reports pointing likely to sale of assets. Bharat Dynamics perks up after positive commentary post-investor meet. All right, well, let's also tell you what we have lined up for you in the next 30-odd minutes. It's a packed show today. In Market Opinion, we have Pankaj Tibriwala of Kotak Mahindra AMC and Prashant Jain, Chief Investment Officer at 3P Investment Managers. In Big Corporate Voices, we have Sandhya J, the Group CFO of Naryana Health. All right, well, straight to the day's trading action. The markets failed to hold the opening gains to end at the day's low. The Nifty and the Sensex fell close to 0.5% in today's trading session. Well, there was some amount of caution definitely after the Fed meet and after the Fed outcome and the hawkish stance that the Fed had in its commentary despite holding on to rates. Well, in terms of the overall texture of the market, we had the Nifty as well as the Sensex, which were consolidating for most of the day, ended close to 0.5% lower. We had the financials, which underperformed in today's trading session. So the Nifty Bank closed with over 500 points cut in terms of losses, as well as the Nifty PSU Bank Index. In terms of the broader markets, that has continued to outperform and has really been the tale of two cities in the past couple of trading sessions. For example, the Nifty Midcap 100 was up around 0.2%. We had the small cap index, which rallied in today's trading session as well. And remember that both these indices are up around 2% on a week-to-date basis already, and that has outperformed the Nifty. Now, in terms of gains, there were strong gains really in the pharmaceutical and healthcare space. That seems to be the pocket of interest in today's trading session. Apollo Hospitals, Max Healthcare, Fortis Healthcare, Metropolis. Remember, there was a JP Morgan report which was positive on a couple of these hospital companies, but that spilled over to the diagnostic firms such as Metropolis as well. And surging in trade along with that was the entire pharmaceutical space. Dr. Reddy's, Divi's Labs, Cipla, all of them went home with gains. On the losing side, IndusInd Bank, Axis, Hero Moto. From the broader markets, lot of volume and price action in Paytm, Z Entertainment, BEL and DLF, to name a few. Well, let's move on then. In Market Opinion, Pankaj Tibriwala of Kotak Mahindra AMC is very positive on the revival roadmap for the manufacturing space. Prashant Jain of 3P Investment Managers also echoes this opinion. He says that manufacturing is a big opportunity.
Structurally, we are positive on the entire revival of manufacturing, and this time it looks real. And when we analyze the previous cycles, we believe that the cycle lasts for anywhere between 5 to 8 years. In our view, we are in the second or the third year. And normally in the previous cycles, we have seen that margins double, ROEs triple, and valuations actually quadruple. Though on headline valuations, most of the stocks are looking expensive. BSE Industrial Index has seen a sharp run up, about 42% on the last 12 months. And most of the stocks are at near all-time high. So maybe in the short term, it may take a pause.
I think manufacturing will come to India this time around. I'm quite optimistic. And manufacturing is a very large opportunity, much larger than services. Sectors that were deeply undervalued, like corporate banks, defense, tobacco, power utilities, have gone up between 2 to 5 times. So that those pockets of valuation have also disappeared. I would not expect these PSUs to re-rate materially in terms of valuations, but yes, to the extent there is earnings growth, I think those kind of returns one can expect even from here on.
All right, on to the second headline now, the big global story. The Fed Reserve kept its rates unchanged as expected, finally taking a break from what has been a historic rate hike cycle. However, economists are terming the Fed decision as a hawkish pause. And here's why. The Fed Reserve indicated that there would be 2 more rate hikes this year, a projection that took economists and market watchers by surprise. We'll get you more on that in a bit, but first let's listen in to crucial commentary from the Fed chair.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. You know, we don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
Okay, so definitely not a pivot, it seems, but let's move on. The Fed Reserve decided to hold rates in its June policy, but its commentary remained hawkish as they hinted at 2 more hikes later on in the year. Natha Venkatesh is here with the key takeaways from the Fed policy.
Yes, clearly it was an as-expected pause, and the statement offered only one justification for why the rates were not hiked or cut, and that is it was to allow the committee to assess incoming data and their impact on policy. So that's why we turn to the so-called dot plot. Now, what is the dot plot? This is a chart on which all the 18 members vote on how many more hikes they see. And just look at the split. 9 of these 18 members have voted for 2 more hikes. Let's look at all the votes and you will get an idea of how it's not just hawkish but even more hawkish. There was only one asking for only 1 hike, but just 4 members. 9 members asking for 2 hikes. 2 of them asking for 3 more hikes, and 1 of them asking for 4 more hikes. And there were just 2 people saying that no more hikes are needed. The Fed statement is also accompanied by what is called new macro projections. It's called Summary of Economic Projections, or SEP. Now, the Fed has actually upped its growth forecast for the 4th quarter from earlier 0.4% to now 1%. That's a huge jump in the growth forecast. Also, it has lowered the expected unemployment by the year end from earlier 4.5 to 4.1%. So again, showing strength of the economy to employ more people. Core inflation is again expected to get worse to 3.9% versus an earlier forecast of 3.6%. The only thing which showed moderation was the headline CPI, which is now cut to 3.2%. The earlier forecast was 3.3%. What were the key takeaways from the Powell press conference? Well, again, the only dovish statement he made was July is still a live meeting and the members did not decide conclusively about July in the June meeting. That's about all he said. Now, for the hawkish part of the statement, it was how he scorched all hopes of any cuts in the current year, 2023. Nearly all members expect that we have to hike somewhat this year, was what Powell said. Now, what will make them cut? Powell gave some indications. He says the impact of the hikes is there, but the committee needs to see, 1, more growth slowdown, 2, labour market to loosen up, and 3, supply lines to get better. He expects the first disinflation signs to come from the housing market, especially from the new lease rentals. He also said that more than 1 year of rate hikes have not yet worked through the economy. All said and done, for me, the biggest takeaway is that growth is very strong. Let's prepare for higher growth forecasts even for our country.
Okay, all right, Lata. Well, thanks very much for that. Growth seems to be quite strong. That's Lata's takeaway. But let's move on then. The third headline, hospital stocks surged today after JP Morgan issued a bullish note on the sector. So they have indicated, or they rather initiated coverage on a whole host of hospital stocks. And they say it is ripe to absorb expansion. Apollo Hospitals, they have an overweight stance. Fortis, overweight stance. Max Healthcare, they are neutral. Medanta, they are neutral. JP Morgan has said why they are bullish, and that includes factors such as secular growth, supply shortages offer promising growth prospects, sustained demand, occupancy is at near optimal levels, which results in the necessity to expand. Profitability has improved for a lot of these hospital companies and is likely to sustain. They forecast a 19% EBITDA CAGR over FY23 to 26. Well, staying with the space, Naryana Health surged over 5%. The company plans to expand further in its core market. Sandhya J, the group CFO of the company, says that India is a very underserved market, so there is ample room for growth and expansion. She also lays out Naryana Health's M&A plans.
The cash flow positions of many of the hospitals significantly improved. And we also believe that COVID kind of made people far more health conscious. India is one of the most undertreated countries in the world, where people don't come, they feel that going to go for treatment is like a bad thing. So people don't do proactive checkups. People only come for a health issue when it's really very serious. So it's a very underserved market. While we are not averse to M&A, but we will be very careful. We won't throw money at a very high priced asset because then we'll not do justice to the patients who walk in. We won't be able to continue to give them the kind of affordable care that we are giving them today. We also have sufficient headspace in our borrowing as well. So depending on how we want to deploy the cash, we will make a judicious choice between internal accruals and borrowing. Last year, it was about 40-60. We spent 40% of our capex from internal accruals, and maybe we will maintain that kind of trajectory into the current year also. As far as where we want to spend, we want to first expand in our core markets, where we have a significant brand dominance.
All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories. Welcome back. You're still tuned in to Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking for you this Thursday. The fourth headline, PNC Infra rallied over 2% following reports that global investment firm KKR is in talks to acquire 12 road projects of the company. Vivek Iyer is here with the details on this.
Well, that's right. So PNC Infra, now newspaper reports are indicating that the company is in talks with KKR's road platforms company, that is Highways Infrastructure Trust. Now the talks are such that they're looking to acquire almost 12 road projects from the company. Now the enterprise value of the assets in this particular deal is pegged at close to 9,000 crore rupees, and the portfolio actually comprises of 11 hybrid annuity model roads and one build, operate, transfer, that is a BOT road. Now, we also reached out to the management of PNC Infra. They said that at this point of time, they wouldn't like to comment on any deal specifics. However, IIFL has written a note on PNC Infra. What they're saying is that media reports are indicating that KKR is looking to buy almost 12 road assets at an enterprise value of 9,000 crores. So they say that the deal translates to an equity value of 2,100 crore, given that the portfolio has a debt of close to 6,900 crore. So at the indicated valuation, the deal would present an incremental value of close to 20 rupees a share for PNC, and they say that PNC continues to remain one of their top picks in the infra space for IIFL.
Okay, all right, Vivek, thanks very much for that. Well, Goldridge Property surged more than 4% after the company announced that it will acquire land for a luxury residential project in Kolkata. The project has an estimated revenue potential of 1,200 crores. Sonal is here with the details.
Well, yes, Goldridge Properties, they have made that second project development in Kolkata, and this is via a land acquisition for a luxury residential project. The developable potential of this particular project would be 9.8 lakh square feet with an estimated revenue potential of around 1,200 crore rupees. This is done via acquisition of a 7.44 acre of land parcel at New Alipur in Kolkata, and this will be done via the local government there, and this will be company's second luxury development in the city. So the street is taking heart from the fact that expansion continues for Goldridge Properties. Pan-India presence is something which is working for the company, and that's why the stock is at a fresh 52-week high today.
Okay, all right, Sonal, thanks very much. Well, shares of Bharat Dynamics gained in trade after the company said it expects improvement in order inflow from FY25. Brokerage firm ICICI Securities also gave a bullish view on the company. Vivek is back with us to tell us more.
Well, absolutely right. There's no stopping, this particular space. And today is the turn of Bharat Dynamics. So what's actually happened is that on 13 June, Bharat Dynamics management met select investors, met select sell-side analysts, and some of the key points that have come out from this particular analyst meet. Number one, the company has said that several defense program order wins are expected post FY25 in association with DRDO. Along with that, the company has said it's now completely ready for quick-range surface-to-air missiles, as limited validation trials ended in April 2023. So they are awaiting order wins over there as well. Trials have also been completed for a whole host of missile systems. And again, they are expecting order wins either in FY24 or in FY25 for these missile systems as well. Lastly, the company says that it's also having a significant focus as far as improving its exports are concerned. Now, some of the other highlights, from the management meet that's been highlighted as far as ICICI Securities is concerned, they're saying significant order inflow is expected post FY25, and they're saying that now exports comprise more than 10% of the total order book. This is highest amongst the defense PSUs. ICICI SECT therefore maintains their buy stance. What they've done is they're saying that at this point of time revenue recognition trends are quite patchy, but what they are saying is that by FY27 they're expecting the revenues to be almost 2 times the FY24 estimated level. So expecting doubling of revenues from FY24 to FY27.
Okay, all right, Vivek. Well, thanks very much for that update. Well, let's move on. Setback to Z promoters Subhash Chandra and Puneet Goenka. Securities Appellate Tribunal has refused to impose a stay on the Sebi order, barring them from holding key managerial positions of any listed company. The tribunal said it will not pass an interim order, citing that it would be virtually allowing further appeal. The stock closed with cuts of over 4%. Shilpa Rani Peta filed this report.
Well, no relief has been granted to Puneet Goenka or Subhash Chandra in the Sebi order that had barred both of them from holding any key positions in a listed entity until further notice. Now, in the appeal in the Securities Appellate Tribunal, or SAT, has said that it will hear the matter now on Monday for a final order, and it has asked Sebi to file a reply within 48 hours. Now, SAT did not pass any interim order because it said that passing an interim stay or an interim order would virtually be allowing the appeal. Now, in a rather heated argument in the courtroom, Puneet Goenka's counsel argued that Sebi's order was not a show cause notice order and that a post-decision hearing could have been granted, and that Sebi has jumped to unwarranted conclusions. Now, what bearing today's hearing and the fact that no interim stay was granted will be interesting to see what bearing that will have on tomorrow's hearing at NCLT. Now, remember, tomorrow NCLT is hearing the Zee-Sony merger matter, where Puneet Goenka is to be MD and CEO for a period of 5 years. Now, while SAT has said that the appellant can move for adjournment for tomorrow's matter at NCLT, it will really be interesting to see how tomorrow's proceedings go on and what the final order will be on Monday. Back to you.
Okay, all right, Shilpa. Thanks very much for that update. Zee Entertainment was weak in today's trading session. Well, it is a setback for Coal India. The Supreme Court ruled that the competition law applies to the public sector company. The Apex Court rejected the Coal India plea, citing that Competition Act does not apply to them since it comes under the ambit of the Coal Mine Act. The Apex Court also held that Coal India's appeal is against the Competition Watchdog's order, and this will be decided based on merits. Remember, in 2014, the CCI had held Coal India guilty of abusing its dominant position in the market. Well, moving on, India could receive net inflows of around $250 to $270 million as the FTSE index changes will come into effect from tomorrow's market close. Vivek is yet again with us to give us more details.
Well, that's right. So, tomorrow 2 rebalancing trades will happen. So, FTSE as well as Sensex, constituents will change, especially in the FTSE. As you mentioned, India is likely to get inflows of close to $250 to $270 million. These are estimates as per IIFL Alternative Research. Now, 2 stocks to keep on the radar. These are inclusions into the FTSE All Cap Index. And so, Medanta will likely see inflows of a little over $8 million tomorrow. And Piramal Pharma will see inflows of over $11 million. Apart from that, select stocks which are already part of the index but which are seeing weight increases. So names like Wipro, almost $20 million worth of buying to be seen tomorrow. PNB, almost $14 million. And even Varun Beverages, over $12 million. Other than that, slighter weight increases will be seen in names like Samvardhana Motherson, Goldridge Properties, ONGC, Solar Industry, Adani Transmission and Adani Enterprises. Apart from that, when you're talking about the Sensex rebalancing, quite a few stocks, but some of the names that we should keep an eye out for are the HDFC twins. Both HDFC and HDFC Bank will see slight weight increases, while on the other hand, IT names like Infosys and TCS will see a bit of selling pressure in tomorrow's trading session.
Okay, all right, Vivek. Well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.